Folks, I'm about to sit down with my own private mentor with 25,000 hours at the charts and break a few things down. In fact, we're going to cover 5 different things. Number 1 is trend acceleration. Number 2 is closed candles. Then chasing the market, why a lot of traders don't want to accept their profits, and also indicators versus naked chart trading. So we're going to break all that down now. And to start off with, I asked him the question, and this was based on my theory around why trends tend to accelerate at the end of the move. So my theory was that they've got to start somewhere, right? There will be like a 5-second candle that has the start of the trend. And if you caught that and rode it all the way through to wherever the monthly closed or 3 monthly, you've got like a humongous trade. But my theory was that every time a time frame closes, say for example, like a 3-minute, 2-minute closes, that close is going to attract all those other traders. So the first traders that get attracted may be the 5-second traders, then the 5-minute traders, then the 15, 30, 1 hour. You get the picture, right? So as it attracts all these additional traders, the trend tends to accelerate because there's just simply more people in that trade. Now, that was my theory. JJ kind of dispels it a little bit and gives us a bit more insight into it. So let's dive into that one first and then get on with the other 4 after.
Well, I don't disagree with what you're saying. I think it's logical. You know, when you think about it, if you want to get in right at the optimum point, the point that the market is actually going to turn around. You know, you've done some analysis, you've got a really strong level, yeah, and you say, right, I'm gonna this is, let's say, on a daily chart, for example, or a 4-hour chart, and you get this strong level, and then you say, right, I'm going to enter this on a low time frame and get in as close as I can to the start of that move. Okay, let's just say that's on a 1-minute chart, like you said. Okay, so all of a sudden now I've got a reason, you know, I've got some price action going on at that level, and it's giving me a reason to get in, right? In other words, I got a bit of confluence now. I got a level, and price is doing what I'm expecting it to do at this kind of like reliable level, if you like, yeah? Okay, so I get in on a 1-minute chart, and then signals come for a 2-minute chart, and a 3-minute chart, and a 5-minute chart. And as price is moving away and these signals are being produced on the other time frames, it makes sense that those time frame traders, they're going to be also starting to take an interest and participate in the market. Now, if you're on a 5-minute versus a 1-minute, the 5-minute traders are going to get in, chances are, unless they're using a limit order, are going to get in 5 minutes, you know, or they're going to get in later. The 1-minute traders, you know, price action traders are already in, yeah? They're right there at the infancy of the, you know, of the move. Of course, don't forget that as price is moving forward, it's if the market's got commitment and enough. Let's say we're bouncing now. The market was coming down, then we're bouncing up, and the more buyers you get stepping in, right? The more activity, the more orders that are going into the market, is pushing that price through the next level. And as we know, resistance comes support. So as resistance is getting broken and you're getting breakouts from this resistance, you've got these trading levels then that your limit order traders will use to keep pushing the market back up. So the market's going up, it retraces to what? It retraces to some liquidity, a bunch of orders. And then bang, that's the bottom of your pullback, if you like. And then, okay, as this keeps going forward, eventually then you're going to get up to a 15-minute chart, a 30-minute chart, you know, 1 hour, 4 hour, and so on, to the point that where you said, you know, you get to the end of the week and you say, oh, look at this, you know, we got it's a strong commitment there. We've got a very strong weekly candle. It's in the sweet spot of the chart. It's just bounced off a higher time frame level. This is looking like it's got some legs, of course. Yeah. So now you obviously, the bigger time frame players, they're all starting to participate now. They can see the direction of the market, and if they want to trade with the direction rather than against it, you know, yeah, institutions largely trading with limit orders. They have to wait for price to come back to that level. But when it gets back to that level, it'll bounce. That's the end of the pullback, if you like, and then the market goes back up and it continues the trend. So yeah, I do agree with your idea of it.
Hey, if you like futures because of the tight spreads and clear setups, go check out Blue Guardian Futures. They let you start trading futures with up to $450K in funding. The best part, you keep 100% of your first $15K in profits, then 90% after that. No activation fees, weekly payouts, and they're sponsoring Chris Eubank Jr. and Birmingham City FC. Go take a look at blueguardianfutures.com or click the link in the description. Right, so my next question was, what about using closed candles as your primary candle to work off and not trying to enter during a candle and that kind of thing? So my theory here was that if you're entering like at 2 minutes 35 on a 5-minute chart, you're really actually entering on a 5-second chart. So therefore you probably should be back testing on the 5-second chart if you're going to enter at that time during the candle, unless it's a limit order, which, limit orders could happen at any point in time. So that was my theory around creating strategies and that sort of thing. So let's hear what JJ's got to say on the matter.
Generally speaking, especially for a new trader, to be moving on a candle, to be making a decision on a moving candle, you're second guessing the market, which is something I just would never do, right? You play the probabilities. So you can have, you can look, it's a really strong candle right now. It's printing, right? And you're in an uptrend. And then all of a sudden, they hit the button, they buy. You think, look how strong it is. And then that closes as a very weak candle and they sell the market down. And invariably, or there's a strong chance now, depending on how tight their stop loss is, where they're going to get, they get stopped out. So you heard me say this on many occasions. Market conditions can change on just one candle. Traders will act upon what that candle closes as. If they see an edge in that weak candle or strong candle, they can execute on that edge based on that edge. So one candle and conditions can change. We can go from an up move to a down move. It depends, obviously you can throw some context around that. Where upon the chart is that, is that candle printed? Is it printed in a downtrend? Is it printed in an uptrend? Is it printed at the top of a range, the bottom of a range? Is it printed at a moving average? There's a whole bunch of context that you can wrap around it to identify an edge. But no, basically, I don't. The only time that I would ever sort of consider buying at market is when I can see that a level has been broke. I have no other way to get in. It's strong. It's a strong breakout. Okay, I would prefer to get in with a limit order, but if the market's strong, it might not come back to my level, or there's a reasonable chance that it won't, and therefore I can't get involved. Okay, so I would need to see some commitment in the market before I would just consider buying at market. I do it not very often. Yeah, I would rather get in a little bit later with a stop order. So buying at market for me is not the way that I would go about my trading.
All right, so let's dive into the next one. So if you don't know, just to give you some context, we've got a bunch of traders trading Gold Rush Alpha, which is the first product that JJ and I have created as part of the Dynamic Traders Club. Now, in the Discord, we keep seeing time and time again people trading when the market has already made its move. So kind of chasing the trade or chasing the move. Now, I used to do this all the time, so it's not a new thing. I was a massive culprit for it. Price would just shoot you in one direction and you're like, oh, there goes the move. I've got to get in. So anyway, I asked him the question as to why he thinks so many people do trade like this and chase that move.
Well, first of all, I never chase the market. That's a golden rule for me. You can look at any price chart and let's just average this out. It prints 3 candles, 4 maybe, before it changes color and goes the other direction. So let's say you get in on candle number 3. How much of the move has already happened? It's about to come back. So I mean, it's a bit different when you see it like where there's conviction and maybe supported with a bit of volume in a strong breakout. And on occasion, you'll get out, like, let's say it's long, you get a whole bunch of green candles, right? Before you get a red one. Yeah. But the further that move goes, the later you're getting in, the more you're chasing the market. So understanding the market conditions before you make a call is absolutely vital. Because like you say, well, if I don't get in now, Well, that's all right to say that, but understand you first want to identify that that's a strong breakout, and that if I don't get in now, I might not be able to get in at all. Now, there are other methods that you can use. You can drop down to a smaller time frame, get in with a limit order on a smaller time frame, which would be my preferred way ultimately of doing it. Yeah, but you do risk the market just continuing without you, and you're not involved. That's an advantage of, if you like, buying at market or using the stop order. But no, I just don't believe in chasing the market. If on most of the time it's only going to print 3 or 4 candles and come back, I don't want to be selling on candle number 3 or number 4. I'm trying to get in at the beginning of the move so I don't have to chase the market. So when you think about it, that move has to start from somewhere. So the current move that's happening, let's say it's going down, it's eventually going to stop and it's going to go back up. Even if it only goes back up 10 pips, 15 pips, whatever, it goes back up. There was a reason there that the market went back up. There was a bunch of orders there. People, bigger players executing their trades. There was a clear, reliable level there. So there was a bunch of orders to go long. I don't want to trade into that. The longer the more you chase the market, the longer it takes you to get involved in a trade, the more likely it is that you're going to get involved at a level that you haven't identified. And then what we all hear, what is everybody, we've heard it 1,000 times. I got in the trade, I got stopped out pretty quickly just for the market to go turn around again and go back in my direction, and that would have been the best trade I'd have had for the day. See, what did they do? Where did they get in? Especially if they're using a tight stop loss, right? If you're using a tight stop loss and you get in on top of a level, well, the market bounces back up. You get stopped out. It bounces into another level. We're talking shorts here, so it bounces into a bit of resistance, and then the market goes down back in your favor, but you're not involved. You're already stopped out. I mean, that happens all of the time. And yet, how do you identify where the problem points are in your trade? What's going to make your trade underperform or get you stopped out if you don't identify any of these levels? And these levels are where institutional traders are trading. They're the ones that print the candles, not the retail traders at home. So when you see a chart with no analysis on it, and you say, well, you're not identifying where your trade can go wrong. I don't like to use the word wrong. There's no right or wrong in trading. But if you don't identify where the market is probably going to turn around, what are they going to do? They're not even going to move their stop, because the old saying is, don't even touch your stop until you get to your trade gets to 1 hour. I move my stop when it hits a point of it's a level. Okay, I said, right now it looks like price action down here on a low time frame. Now it looks like the market's going to come back up. If I don't act now, the chances are I'm going to get stopped out. So I act. I don't sit there and pray like so many novice traders will do. And I see that all the time. I've just seen a bunch of posts over the last few weeks, a whole bunch of them, where the traders are just needlessly getting stopped out because they're not acting. They're not managing the trade. And I once learned that the money is made in your trade management. So if you don't trade manage, you don't do any analysis, what you're doing, you're really shooting in the dark. If you're not identifying where other traders are going to step into, especially institutions, where you're going to step into the market, then how do you know that your position is under threat? You don't. Sometimes it just bewilders me, but that takes time and it takes knowledge. Yeah. And conversely, you can obviously use that to your advantage when you're actually getting into a trade. We'll do that, right? Novice traders will do that. They'll get a strong candle, a setup candle with trend at a moving average, something like that. Yeah. Okay. And all of a sudden, the market just, once the low of that candle gets taken out, the market just drops down. there was plenty of people participating in there. See, they're using that information to get in a trade, but they're not using that information to either stay in a trade or manage their trade or prevent them from getting in a low probability setup in the beginning.
Hey folks, what a view behind me. I'm at Blackbull Markets headquarters here in Auckland, New Zealand. Speaking of views, you can get TradingView paid plans for free at Blackbull Markets, saving you up to $600 a year. That's right, get either the Essential, Plus or Premium plans absolutely free, and all you need to do is trade from one lot a month at Blackbull Markets. And you can also get a 100% deposit bonus for your first deposit up to $1,000. All you need to do is click the Trading Nut link in the description below. The next question was, why do people struggle to take profit or accept the profit that's on the table when they should take it, even though they know, even though they've been taught this is the time to take profit? And this is kind of the other thing that we keep seeing in our Dynamic Traders Club is, there's an exit signal taught in the course, and people choose to ignore it and inevitably either get a full loss or get taken out for break even when there was profit on the table. So I asked JJ, what is the thinking behind this? Does he know why people tend to do this?
You see it often. And what do I put that down to? It's like, okay, I've got this setup. I got this setup, right? I've been waiting 2 hours for the setup, 3 hours for the setup, whatever, right? Okay. Everybody wants that setup to be a runner, to be the trade of the day or the trade of the week. Or there's going to be 5 hour, 8 hour, whatever it wants to be, right? Yeah. And it's like they're not prepared to accept that it might only go 1 hour or 2 hour. And then there's evidence that presents itself on the chart. They're saying manage your trade now and lock in what you've got, because the chances are now that the conditions have changed, and you're probably going to give a large part, or if not all of those profits back, if you don't manage your trade. So I think there's this perception that there's that every trade is going to be a good trade. See, if you can identify it that your setup is a high probability or a lower probability, okay? It's not just in terms of whether that's going to be a winner or not, but whether it's going to be a multiple hour trade. So for argument's sake, you've got a nice, strong, you're going uptrend on a 5-minute chart, and you've just crossed a higher time frame, very clear level, okay? Market comes and bounces off that. The chances are now that you're going to be in for a nice trade, okay? Provide, the price action's good, it's gone up strong, you get a very short pullback, into the level that I'm talking about, and you get another nice move bouncing off of that level, right? It's clean, it's strong trading. Those, that's like a textbook one. Milk it. Those are the ones that saying it's probably going to run. Okay, but it's only going to run as far as the next major level. So if you identify where that, it's probably only going to run to that level, I should say, right? Bear in mind, you're trading down on a 5-minute chart. You're not going to have the largest of stop losses, most likely, right? So I think that if you don't identify this information, how can you possibly determine whether the trade that you're getting is high probability or high probability of a multiple R move? And you can do that with good analysis. If you can read price pretty well and understand where the institutions are going to step in, and you can get in on a lower time frame, then you can work towards that, the probabilities of being that it will be a multiple R move and not just say a 1 hour scalp. Okay, but you really need to refer. You say there's not always a need, but it's helpful when you refer to higher time frames. Okay, is it essential to get a multiple R move down on a 5-minute chart? No, absolutely not. But when your price action is clean and the market is strong and it's pulling back, a very small distance in compared to the prior move. It's information like that is saying to you, look, the market is strong. The chances are now you're going to get more money out of this trade, but manage your trade according to the market conditions. Don't second guess the market. Read the market and act accordingly. And yet, I can appreciate to a novice trader, without that knowledge, it can be a very difficult thing to do.
And finally, what I asked him was around naked chart trading. So I started to ditch all my indicators years ago, and it wasn't until I met JJ that I actually started to bring them back and now see the benefit in them in a certain way and for certain things. So I asked JJ what his view is on traders that have decided to go down the whole naked chart trading route and ignore indicators completely. So let's have a look and hear what he had to say.
Yeah, I think because of the passage of time, literally the amount of time I've spent at charts, I've been able to use, and I still use today, as you know, just a handful of indicators, but I use them very much for as a point of confluence, right? Right. You can look at a point of confluence on a chart. We got a level here, and it meets with a trend line. That's a point of confluence. I'll do that, of course, but I'll actually use indicators for the value that I have worked out that's in them. Yeah, not necessarily the standard way that perhaps the textbooks would tell you how to use it. Yeah, indicators are they're kind of like can be a bit of a black art. I think people take indicators too literally. Every indicator comes with nuances. If you don't understand what the nuances are, then you don't know how to get the best from that indicator. You don't know when to look at it and say, it's giving you information now of value, or whether it doesn't have value. And I think for new traders that come in, they can put too much emphasis on an indicator and really not know when to use it, to their advantage. And it can throw people. There's too much. There can be too much reliance on them. So as a result, over the years, especially over the last handful of years, we're kind of like naked trading. Naked charts have become more sort of abundant. There seems to be so many more people kind of drop-in indicators. But yeah, if you know how to use an indicator, they're time served. They've been used for decades. You just need. It's like any tool in a workman's toolbox. You have to know how to use it. And what you get, you tend to see a lot of comments where people are slating indicators and saying, "Our indicators are no good. You don't need it." No, it's your way of doing it. If you don't see the value in it, maybe you haven't learned the value within it. You haven't learned the nuances. You haven't put the time in. It's just to me, it can be sometimes traders can miss a lot from the old school tools. Each to their own. I totally understand that.
Hey, if candlesticks still confuse you, they're costing you more than you think. My private mentor JJ's decoded 25,000 hours of trading into one better candlestick. Click the link in the description or visit tradingnut.com to watch the free video and grab the free guide. All right, folks, so there we have it. Hopefully you got some massive value from that. Now, this is just a teaser as to what JJ can offer. This guy has an absolute wealth of knowledge when it comes to anything to do with the market. We've got a bunch of traders over there in Gold Rush Alpha, as I've mentioned. If you guys are looking to find out more about this, then what I recommend doing is checking out the link below this video. So we've got a free PDF and video there where JJ breaks down the difference between what we're doing at Gold Rush Alpha and I suppose what a lot of other traders are doing out there. And what we find is some massive success. So we'll drop another video up here where we go through the results of the club so far. It's only been open for 2 months, and we're getting traders who've taken 11R trades, 14R trades, 8R trades. It seems to be every week somebody's getting a massive R trade, which is ridiculous. And also, we've got our first funded trader in there as well. So this guy went from not being funded, and within 2 months, and it was before the 2 month mark, he managed to get himself funded. So that was fantastic to see as well. We've got tons of cool stuff in there, which is quite different from a lot of other trading groups. So we actually have a losing trades room. We want to know when people lose, and we want to know what trade it was and what they took, and we'll help people work through that loss and understand why they lost that trade. And so you feel like there's a safe place to put your losing trades in there as well. So folks, if you're interested in that, then what I would recommend is head down below, check out that link, get the free PDF, get the free video, learn about Gold Rush Alpha, and there might even be a coupon there for you as well. So check that out. All right, thanks for watching, and we'll see you in the next one.